PepsiCo shares higher after the company out this morning with a beat on the bottom and top lines. Joining me now, Hugh Johnston is the CFO of PepsiCo, also the vice chairman. Welcome back, Hugh. Good morning.
Thank you, Sarah. Good morning to you as well.
So the highlight of this report, 5.2% organic revenue growth. We haven't seen that kind of growth from Pepsi in years. What's powering it?
Yeah, we really do feel terrific about the top line performance. I think it's a combination of two things. Number one, you see continued portfolio strength, whether it's our U.S. businesses, our international businesses, across snacks and beverages. We just continue to see strong, broad-based performance. In addition to that, our North America beverage business really has been strengthening over the last couple of quarters as we've invested in more advertising, we've invested in more execution. I think overall the portfolio is working, and you see stepped-up execution from increased investment in the business, advertising and marketing, as well as salespeople and feet on the street. So we feel great about the top line this quarter.
You know, what else has changed at PepsiCo recently is leadership. I mean, CEO Ramon Laguarta took over in October. He's been a little press shy, so tell us, Hugh, what are some of the biggest changes under his reign versus Indra Nooyi, who was there for years?
Yeah, I mean, in a lot of ways, it's certainly continuity. Indra did a great job for more than a decade running the company, and we're just evolving the strategy, I think, of the company right now to invest a bit more because we see opportunities in our innovation. We see opportunities in being able to execute in the marketplace. So I wouldn't call it a revolution. I would probably call it an evolution in leadership that's delivering markedly strong results.
One question investors and analysts keep having on this quarter is why didn't you raise guidance with these new growth prospects and all of this enthusiasm you're seeing around execution and higher spend?
Well, you know, it's interesting, Sarah. We just gave guidance 60 days ago, so I'm not sure we're ready to make any changes off of something we just said 2 months ago. What I would say is, you know, the world is a volatile place, and obviously with our guidance, we always want to accommodate some level of volatility. But we are pleased with the results. Competitively, we're pleased with the top line, and we do expect, as we see upsides that come through in the business, to reinvest them back to even strengthen and further make our business stronger.
What are you seeing competitively, specifically in North American beverages, which you've turned around, but Coke has been growing nicely as well. It's also faced pretty strong currency headwinds, which has weighed on profitability lately. So what's that like on the ground?
Yeah, I think you see heightened focus across all of the categories. I think you see a good, healthy level of competitiveness going on in the marketplace. I won't speak for our competitor, but I think we're innovating very well. And as a result of that, you're actually seeing accelerated category growth rates, particularly in carbonated soft drinks. So I think we feel good about the state of competition in the business. We feel like it's healthy competition. And as a result, I think all attached to it are doing well.
What are you telling investors today as far as how much more room there is to improve on execution, on the feet on the street, as you call it, the sales force putting products in the stores, and all the other sort of levers that you're pulling that are working and leading to higher growth? How much more room is there?
Yeah. Oh, I think there's quite a bit more room. The way I would characterize it, to use a baseball metaphor, is we're in the early innings of the game, probably second or third inning. I think we have lots more room to improve on execution, both on the marketing side as well as on the feet on the street side, and that'll only enhance our top line results over time.
Finally, I always like to ask you about the consumer. There have been a lot of worries in the market lately about global growth. Talk a little bit about what you're seeing in terms of consumer spending in the U.S. and the rest of the world.
Yeah, right now we see a healthy U.S. consumer. Now, of course, we play in consumer staples, so I won't speak more broadly. But within our segment of the economic world, we see a consumer that is capable of spending and is willing to spend on products that they really see as differentiated and adding value. And that's what's driving our focus behind putting money behind advertising, putting money behind innovation, because when you deliver something different that the consumer likes, they're certainly willing to pay for it and buy lots of it.
Like white Cheetos. Is that what you're referring to?
Exactly right. Our Simply White Cheddar Cheetos. It's a terrific product. We're basically selling all we can make, and consumers absolutely love them. If you haven't tried them, please go out and do so. It's a great product from Frito-Lay.